Good morning and welcome to this special event, The Promise of Fintech in Latin America, part of our Going Digital series. My name is Benjamin Gadan. I'm the acting director of the Latin American program at the Wilson Center in Washington. Over the last 2 years, we've seen an explosion in digital technologies in Latin America. Our Going Digital series has explored this digital transformation with the help of experts from companies such as Amazon Web Services, DirecTV, dLocal, Ericsson, Globant, Microsoft, Salesforce, Visa, and Zoom. We've addressed themes such as Latin America's digital divide, privacy and cybersecurity, and the region's digital workforce. Recordings of all previous Going Digital events are available on our Latin American program website. Today, we're going to explore Latin America's rapidly expanding fintech industry. As always, our goal is to identify the obstacles to this region's digital transformation and to figure out how to maximize the social benefits from the dramatic technological and behavioral changes underway. Fintech, of course, stands for financial technology. Though often associated with cryptocurrencies, fintech refers to a large category of digital innovations designed to give individuals and companies easier and less expensive access to a wide range of financial services, from money transfers to raising funds for a business. During the COVID-19 pandemic, interest in fintech exploded rapidly and globally. That was also true in Latin America. From 2018 to 2021, Latin America's fintech industry doubled in size, and investors took notice. The region has a growing number of fintech unicorns. These are financial technology companies with a value of at least $1 billion. Funding for fintechs reached $20 billion last year in this region, more than 4 times the level in 2020. Indeed, in many ways, this region's financial technology sector is a remarkable success story. But there's a lot of unmet potential, and there remain many barriers to continued growth in the financial technology or fintech sector. And that's what we'll be focusing on today. After all, despite the appearance of so many digital financial tools and so much competition to traditional banking services, Latin America is still struggling to improve financial inclusion. Roughly half of the region's population still has little or no access to basic financial services, making it difficult for individuals and families to save, shop, and grow their businesses. Financial technology firms trying to solve that problem are plentiful, but they are still concentrated in a handful of countries, such as Peru, Ecuador, and the Dominican Republic. In Brazil, fintechs like Nubank, Mercado Pago, Ame Digital have nearly 100 million active monthly users, exceeding the number of customers at Brazil's traditional banks. In Argentina, where mistrust of the national currency has made digital currencies particularly popular, digital banks are also rapidly changing the financial services industry. Chile and Uruguay are not far behind. Yet, in too many parts of the region, limited internet access and unfamiliarity with digital technologies has slowed adoption of these new tools. Laws and regulations are also a challenge for the growth of fintech innovation. Lawmakers and regulators have understandable concerns about privacy, fraud, and volatility. That said, policies that protect consumers while promoting the development of new financial technologies and the adoption of existing platforms could produce significant benefits, including reductions in the high cost of remittances, or international money transfers sent from Latin American migrants to their families back home. To discuss these issues, we have assembled an extraordinary cast of experts, including Bruno Magrani, the head of public policy at Nubank, Diego Caicedo, the CEO and co-founder of Omni Latam, and Lindsay Lair, a director at America's Market Intelligence. Welcome to you, and thank you for joining us. Before I turn this conversation over to my friend Jonathan Nelson, who is the CEO and founder of HF Capital, and also today's moderator, I want to express my appreciation to our co-sponsor, Clayton. Clayton is, of course, the blockchain arm of Korea's Kakao Corporation, and it has given us invaluable help with the organization of this event, and also 2 upcoming Going Digital dialogues, which will focus on other aspects of financial technology in Latin America. With that, Jonathan, over to you.
Benjamin, thank you very, very much. And speakers, thank you very much for joining. As Ben said, I am the founder and CEO of HF Capital, And we are a fintech helping technology companies in emerging markets access IPOs and capital markets. And so this topic is very, very near and dear to my heart. I happen to be on the board of the Wilson Center's Latin America program and have been talking with Benjamin about doing a series like this for a long time. So let's just dive in. If people have questions while the conversation is going on, there should be a chat box below the streaming thing. And just go ahead and put those questions in as we're talking. We'll probably have about 40 minutes of dialogue for the panel and then another 10 or 15 minutes for Q&A afterwards. I tend to run a fairly loose and interactive kind of panel. And so if you guys have questions, just go ahead and put them in and we'll head it off. Let's just jump in. Diego, Lindsay, and Bruno. Diego, can you start? Give us like 2 to 3 minutes about what you guys are doing at Omni Latam and what you guys are doing and why, and we can go from there.
Perfect. Hey, first of all, great to do this. I think this is one of those things. As Latin America has become a destination for capital, I think more and more interest in everything. This is what really is going to change the region. It is being able to focus on this. So I think these spaces are just incredible for everything we're doing across the region. So my name is Diego Caicedo. I'm the CEO and co-founder of Omni. We are a data-driven lender focused on providing SMEs with access to credit. And this is one of we started the company around 6 years ago. We really came out of this. We were seeing the great things that were happening in the world of people in the region and across the globe. And we said, look, the people part of the credit, we had Nubank that had already started in Brazil. We had all these really front runners that were taking charge of it. And we sat back with my partner and said, look, our true dream is how do we build that scalable credit system that we're creating step by step for people? How do we transfer that over to a company? As a person today, the amount you can get, I'm a user of Nubank, and you get your card in minutes. It's incredible. And it's one of those things. In a company, I'm still subject to 6 weeks, 8 weeks of process diligence, meetings with my bank agent and everything. And this has really slowed everything down. And SMEs make up 70 to 80% of employment in the region. They are the backbone of these economies. And when you look at how hard it is, we've been really trying to tackle this head on. So for the last 6 years, we've been growing. We have an operation in Chile, Colombia. Now we just opened Brazil a month ago. And we're really focused on being able to build out that scalable credit system for the SME. So we focus on short-term working capital just because we live and die by our working capital. If we have the money to pay our salaries and our taxes and our providers by the end of the month, we can make it to the next one. And that's really what the resilience of the region, and we've shown it through COVID, through everything that's happened over the last couple of years. Like the entrepreneurs in the region are just incredible, and they really have needed that support from the outside system. And Omni's been here, and we've been building it to really plug that capital gap in the region. So super excited to be here. Really going to be a fun conversation.
Thanks, Diego. Bruno, can you talk to us a little bit about Nubank and who you guys are, if people haven't heard about it, what you guys do, and what your position inside of Nubank is?
Of course, Jonathan. Thank you so much for the invitation. I'm super happy to be here. Nubank was actually founded in 2013. It's 9 years old. I guess like when the founders created Nubank, it wasn't called Fintech yet. What they wanted to do is to use technology to disrupt financial systems. Nubank started with a credit card product that you could control using your phone. It later started to offer other products such as a checkings account that is also it also works as a savings and investment account. So the basic idea was that and that's Nubank's mission as well, which is to empower people by taking complexity outside of the way. People tend to have a very difficult relationship with finance. Finance tends to be this thing that is complicated. People are afraid of it. So what we want to do is to make it simple, to make finance as an instrument for you to achieve your goals, whatever they are. So we have been using this concept of by everything that we do, we try to make it as simple as possible without bureaucracy, without any unnecessary process in people's way. Recently, Nubank has reached almost 60 million customers across Latin America. The majority of them are based in Brazil. We are offering our products in Brazil, Mexico, and Colombia. We do have offices in other countries which work as talent hubs. So basically, we have offices in the US, in Germany, and Argentina as well, basically to attract talent to work for Nubank. Nubank has people from 50 different nationalities these days. We are, and we're growing extremely fast, which makes us super happy. But that said, we still believe there's a lot to be done in Latin America, not only in Latin America, but in other parts of the world as well. We believe there's a huge potential for fintech to continue to improve people's lives. And that's one of the reasons why I'm so happy to be here contributing to this panel.
Thank you so much, Bruno. Lindsay, can you talk to us about what you do and what America's Market Intelligence is?
Thanks, Jonathan. Absolutely. Hi, everyone. Great to be here. My name is Lindsay Lear. I am the head of the payments practice at America's Market Intelligence. We are a market intelligence consultancy, strategic planning and consultancy group focused exclusively on Latin America. We were founded in Mexico City in 1991 and have matured over the years and now operate several quite mature industry practices. I lead the payments practice, and my job is to study everything that's going on very intently, at a very granular level, to be able to provide insights, to be able to provide projections, to be able to make sense of what's going on in the region, and to help companies cut through the noise, right? There's so much, as we've all been saying, fintech has been exploding. There's tons of numbers thrown around in the press, a lot of fanfare and excitement around the subject matter, and we help companies to really get grounded. Okay, what are the numbers? What are the breakdowns? What are the trends? What's going to happen? How can I understand what's happening in Brazil and relate that to Panama or Ecuador? And so that's what I do day in and day out, looking at this stuff all day long. And I'm excited to share a little bit about what we've been seeing.
Thank you so much, Lindsay. And for our audience, our speakers are actually quite modest. These are some of the top minds in terms of financial technology and small businesses with OmniLatam, financial technology as it relates to the unbanked with Nubank, with Bruno, and one of the kind of the top global minds, as far as I'm concerned, about fintech and payments across all of Latin America. So to the audience, we actually have a treat for you guys today. And Jose, thank you very much for that question in the audience. Keep them coming. We'll actually start addressing those questions as we go. But Lindsay, can you give us just kind of a brief overview of Latin America's challenges to financial inclusion? What is financial inclusion? Why is it important? It's kind of a buzzword that you hear in the development community, but can you double click on that and talk us a little bit about what that is and why it's important across the region?
Sure. You know, it's funny, you know, gotta define these things before we start talking about them, right? I love Latin America. I lived in Argentina. I'm a white girl from Maine. Nothing to do with Latin America, but I studied Spanish. I lived in Argentina for about 5 years, traveled the whole region, and have been my whole career been focused on Latin America. And it's a fascinating region for many reasons. I'm sure many of you guys kind of intuitively sense what I mean. But it's a wonderful place to study because there's all of these contradictions going on, and those contradictions are the birthplace of disruption in technology. So when I got started in payments from 2012, banking penetration in the region was at about 30%. And so we have a big population, over 600 million people, but very little access to financial services. As internet penetration grew and smartphone penetration grew in the region, this started to change access a little bit. And all of a sudden, by 2017, we had 50% smartphone penetration in Latin America. And that all of a sudden represented a critical mass for banks to start paying attention, for venture capitalists to start paying attention. Nubank had already gained a couple of million customers by then, and now the region was on the map. It wasn't discarded anymore. Oh, they don't have bank accounts. They're not involved in finance. Now, oh, this is actually a region we need to pay attention to. Fast forward to post-pandemic, in which the region experienced the fastest acceleration ever, jumped ahead 2 to 3 years in technology adoption. We now have around 80% smartphone penetration, some higher in some countries like Brazil, Chile, Argentina. And banking, what to me is the most unbelievable is that banking penetration, thanks to companies like Nubank and other fintechs, as well as traditional banks, has jumped massively to around 80%. Okay, now this varies from country to country. In places like Mexico, it's still low, around 50%. And when I say banking penetration, I mean you have access or ownership of a digital account or debit card. That doesn't mean you use it every day. It may mean that your nomina, your payroll or your government social benefit gets deposited into a digital account, but I still immediately extract it in cash. But at least the barriers to access have mostly been removed thanks to the work of fintechs, governments, the traditional financial system. The biggest barriers are still in rural areas where truly there is not the connectivity infrastructure built yet. And older populations who are slower to adopt technology may have some barriers there. But among 15 to 40-year-olds, barriers to access have been removed. And now it's about improving quality of services, improving affordability, and improving the user experience and providing products that actually solve daily problems to promote usage.
That's fantastic, Lindsay. Thank you very much. Bruno, coming from the West, coming from here in Silicon Valley, it's sometimes hard, or Washington, D.C., it's sometimes hard for us to kind of imagine a world without a bank account. Like, what are the problems that you guys saw when you guys started? What problems were the unbanked people facing? And what really sparked your founders to decide to kind of take on this challenge?
I think that's a great question, Jonathan. So to start off, think about it. If you don't have a bank account, there is first the problem of public safety or security overall. So, if you combine those two things, and if you take into account that many countries in Latin America face a problem of public safety, it means that there are more people carrying cash around, which makes them more vulnerable to being robbed, to being mugged, to lose their savings. So there is this initial problem. There is a second issue, which is by not having a bank account, it's very hard for you to be seen by the credit system. So you're not able to build your credit history. So there are no transactions being done. There's no credit operations. So there's no signal really to be fed into bureaus that will help you that could help you in the future to have access to credit. If you take into account one of the very popular products in Brazil, which is like this zero interest installment that you can use by just using your credit card. It's not really a credit. It is sort of a credit product in the sense that you can purchase goods and you paying in up to 10 installments without paying any interest. That's a very, people have been calling that buy now, pay later. We joke that buy now, pay later has existed in Brazil at least since for the last 20 years, which is this very commoditized these days, really, product. But it has allowed people to have access to goods that they couldn't afford before. So basically, if you don't have the money to purchase something, if the interest rates are super high, doesn't matter. There is this product offering. But if you don't have a credit or if you're not banked, if you don't have a checking account, if you don't have a credit card, you're not able to have access to those products as well. So just to mention two of those to start off. And to your second question, I guess like the experience why did our founders, the founders of Nubank, decided to create Nubank? There is a very interesting story about how Davi, he's from Colombia. He was actually working in Brazil for a venture capital fund called Sequoia, a very popular one in the VC world. And Davi, as a foreigner, he was trying to open a bank account for himself. And he was in this fancy street in Sao Paulo, Faria Lima, where all the large banks are located. And even in this fancy place, he was treated as a criminal trying to get access to a branch. There is this revolving doors, security guards, heavily armed, very suspicious of everyone, asking you to put your phone like somewhere else, passing through the metal detector. And this had been a regular, very pretty common experience for anyone really who would enter a bank account. So imagine if you are, from a lower income class, you see all of this, you don't even want to get access to the bank. You see that as something from another world. So there is this initial barrier that is physical, but also a mental barrier to people. That it just doesn't belong. Banks just don't belong to my world. So they saw an opportunity with all of that to create products that were much simpler, that would allow people to have access in a much simpler way without all the bureaucracy. So I started only with the physical barrier to illustrate, but there are many others. It was the case that used to take people like a couple of months to open their bank account. They would have to sign several forms and have to prove who they are, and you wouldn't have like your credit history as we were talking about. Anyway, so they saw this opportunity to create this very simple product. So and that's what really made Nubank be, I would say, successful offering its product. So Nubank, by doing this offer, it had like a huge impact, including people in the financial system. We actually conducted a survey recently with our customers, and we found that between 5 and 6 million of our customers, they had their first banking product with Nubank. That was the first time they had access to a financial product with Nubank, between 5 and 6 million. And that's only Nubank. That's Nubank alone. We have some data from the pandemic, from the central bank in Brazil, that says that during the pandemic, 16 million people got access to the financial world by having to rely on the economic stimulus checks that the government was giving out, and all of that, and not to mention some other initiatives that also the government has done that has really helped foster financial inclusion. But just to comment on a few, and we can come back to this afterwards.
Bruno, thank you very much. Diego, as a business owner here in the United States, it kind of blows my mind that businesses can operate without a bank account. Like the first thing that you do when you start a business in the United States is I get a business license, and then I take that, I go to the bank and I get a bank account so I could just get paid. How does an unbanked business in Latin America, like how do they do business?
So I think this is like Bruno was saying, but I think Lindsay hit it on the head. This is the world of contradictions, right? So this is like living in Latin America is living in a world of contradictions. So we effectively, that was the scenario. I would say pre-pandemic. It was even a place like Chile, which is the most sophisticated part of Latin America. Getting a bank account was still painful. I would say Brazil, we're still living through that pain as companies. Like even as a large or larger formal company, I have to go in and open a bank account. It's still going to take weeks to open a bank account in Brazil. So it is still that pain. What our governments have done that is incredible, Jonathan, and it's really astounding. When we got into this, we really said, okay, we have this huge contradiction. In 2008, Chile said, look, we want to have visibility on everybody and everything that the country buys and sells, so we can keep track of what taxes are due. And this is something very crazy. Like imagine anytime you buy something, the government, the IRS is getting a copy of that receipt actually before it gets to you. So imagine if the IRS had a copy of every single receipt and every single piece of data, what you bought, who you bought it from, what terms you paid it in. And we started to accumulate this huge amount of data because we really wanted people to pay their taxes. Like we've as Latinos, we've always had a very hard and difficult relationship with the tax man. It's one of those things, right? But Chile started this over a decade ago. Nowadays, electronic invoicing, tax reporting, and all these electronic social security systems, 80% of electronic invoices are generated in Latin America today. This is one of those things that blows your mind because apart from Latin America, you have some of the Nordic countries, and that's basically it. Yesterday, the European Union said, look, by 2025, we're going to replicate the Latin American model. The US has basically started to follow suit on this. And the reason why it's getting the bank account is a level of being banked. But the reality that being banked for us really means, do you have access to the credit system? Am I able to actually leverage my track record in my bank account to solve a problem in a real challenge that I have as a business owner? When I sell something to a company, they're not going to pay me cash. They're going to pay me in 30 days, 60 days, 90 days. And then what do I do? So now selling is not the hard part about building the business. It's how do I live those 90 days invoice to invoice getting paid so I can actually build this out. So in the US, you would go to the bank and you would figure this out and you would have access to the formal credit system. In Latin America, without access to that formal credit system, and we always joke about this internally, like we compete with everybody's grandmother, mother, anybody that can give the entrepreneur any type of capital at the end of the month because you need to pay salaries, you need to pay your taxes, you need to pay your suppliers because you need to keep on living. So what we've really been focused on is, look, if we have all this visibility onto what a company does, if I know exactly what Jonathan buys on the 3rd of every month, who he sells to on the 7th of the month, what prices, what is his margins, I am really emulating what we would see in a bank account, even though the transactions are being done in cash. It doesn't really matter because there's a huge amount of incentives to actually get the formal. So this is the contradictions Lindsay was talking about. It's like, even though the transaction's in cash, we have a digital footprint around that transaction. And what we've built is actually the ability to understand those digital footprints. And instead of having somebody bring me 1,000 pieces of paper, their contract with their clients and everything, we can analyze all that data using machine learning and algorithms, and we can actually provide that client with a line of credit in a matter of minutes to hours. So it really changes the entire game because when you're coming to that moment of the month where you need money to pay your salaries, you really can't wait 90 days for the bank to make an assessment. Like you can't tell your employees, hey, you know what? The bank's going to come in with the loan in 90 days. Hold on. And this is what really happens in companies. You have to, and this is why it's so hard to build capital in the region, because everything is always depleted. And then you have to go to predatory lenders. You have to go to all these different things. So this is really the transformational point. And the really hard part about this is, since this information is unique to Latin America, we were the first ones into this. There is no blueprint or somebody, hey, the US company that did this in the US figured it out this way. So we're basically at the cutting edge of this for the good and the bad. That means like we have to figure a whole bunch of infrastructure into how do you do this? Privacy laws, GDPR, like there's 1,000 levels of compliance that you start to see, and like because the data was never built for underwriting, for credit. The data was built for the government to collect its taxes. So it's really fascinating. It's been an incredible journey over 6 years to build all the underlying, sitting down with the regulator and saying, look, this is what we do, explaining to the regulators. And like, we're super excited about the amount of traction that this has gotten inside of governments because it's really shown that it enables access to credit. Like it is a real way for companies to get access to credit at the right rate, which is what we've really been striving to do.
No, that's fantastic. And I've heard this from talking with tech entrepreneurs around the globe. And for instance, I was talking with a MasterCard executive in Dubai about 3 years ago. And one of the things that he was saying was that they really hope in the Middle East to have a fintech ecosystem like Latin America does. And it sounds like, Diego, and I've heard things like PIX, the system in Brazil, like it really seems like in some respects, some of the governments have actually leapfrogged Western governments in terms of technology and tax reporting. Is that accurate, Bruno, Diego?
I'm a fan. So like the Brazil. I'll let Bruno because he probably knows this to heart. But like the Brazilian regulator has done an astounding job over the last couple of years. Like the Pix story is mind blowing, and I'll let Bruno jump in because this is probably his favorite one. But like from the outside in, it's one of those things to look at as an example.
And that's great to hear your views, Diego, about Pix. So, I mean, we have been, I mean, huge supporters of Pix. Actually, we wanna think that we had a part as well, like in building Pix. I mean, ever since I believe it was 2018, Nubank was looking at China, trying to understand what was happening in China with QR codes, and China leapfrogging credit cards or cards overall, right? And you know the Chinese story. And so we were thinking whether it would make sense to replicate such model in Brazil or not. At some point, we realized there was a huge problem with infrastructure, and there was, I mean, we would be facing a huge issue trying to really include like both sides, you know, the merchants and also the customers, and we thought that that was the kind of issue that justified regulatory intervention. So we started to work. We knew the central bank was looking into RTP, I mean, in many countries. So we started to work with the central bank. We actually helped them out thinking about the infrastructure, how to build the basic components that would allow Pix to function in a very lean way, but also relying on allowing the private sector to chime in and to use their technology to offer, I mean, to take care of customer experience and many of the heavy lifts. So when the central bank launched Pix 2020, Nubank was particularly well positioned to offer the product to its customers. We in the beginning, and that continues to these days, we had like a big chunk of all the registrations that were made with Pix. But after that, Pix really exploded, and it's been amazing to see the success of Pix. There is like this chart from the BIS that compares the adoption of RTP across several countries, and it's interesting. I was seeing this chart recently, and Brazil these days, in terms, I mean, if you take the amount of transactions that are done using RTP, so Brazil took 1 year to reach where, for instance, to reach where, I mean, Sweden took 6 years to reach the level of transactions that Pix took just 1 year to get there. So that means that 40 million people in Brazil, they made their first bank transfer using Pix. And now we have 124 million people who have registered to use their aliases with Pix. The way Pix operates, for those who are not familiar with, it's just a way for you to you register an alias with the central bank using your bank. So it could be like your phone number. It could be your email. It could even be a random key, a random alias. And then like you can give people that alias, and they can get their phones or whatever banks they're using, and they can just route money to you by using that number or that email account. And they can do that by without paying anything. So it's completely free of charge for individuals. There is a way for the system to be sustainable. The central bank allows companies to charge merchants for receiving Pix, but it's really incredible. I mean, how fast Pix adoption was in Brazil, and how really transformational I believe Pix will continue to be. At the same time, there were in the beginning many other banks. That was not the case of Nubank. They felt threatened by Pix. They felt that the central bank was competing with them, you know, by also acting as a player in the market, which I don't think it's accurate. But now they're starting to see the many other opportunities that are being built with Pix. I mean, if you think about all the credit products that you can offer on top of Pix, you can recreate the credit card, you can recreate the debit card, and you can do all of that by including a bunch of people into the financial system. So I think that was an important transformation. I don't think at all that was that Pix is a competitor. Pix is essential infrastructure that should be deployed like in many other places in the world, and the banking system should embrace it, and because and should start thinking about how they can build a business model on top of this RTP system. So they are going to be critical for financial inclusion, and I think like in the long run, it makes total sense for us to be seeing more of these RTP systems being developed by the regulator or by governments in other countries.
No, that's actually, I think from what I've heard, Pix has been a tremendous success story in Brazil. Lindsay, one of the questions that we had in the audience was, Latin America is a very big place, culturally, geographically, linguistically. Are there systems like Pix in other countries? Is it just one country doing this out of the 28 or so countries in Latin America, or what do you see kind of across the region?
Yeah, so I wanted to piggyback on the comment Diego made about just how fantastic the Brazilian regulator has been, because yes, there have been attempts to create a Pix-like system that have not at all scaled or succeeded. And, I'm constantly asking the question, well, what's the difference? We have a constant kind of comparison between Pix in Brazil and CODI in Mexico. CODI is a QR code system launched before Pix by the Mexican central bank, intended to promote financial inclusion, and has been growing month over month, but has by no means reached the level of scale that Pix has. And there's many reasons that we could go into that, but I just wanted to add that I was on a different panel and I asked a couple of Brazilian executives, bankers, the Brazilian central bank has been very influential and has succeeded in influencing banks and making a big impact in the local industry when that hasn't been the case in other countries. So what is the central bank doing right? What are they doing well? And beyond there were some very practical tips that they gave, but what I really liked about what he said was that the regulators have stayed committed to what they say they're about, which that just made an impression on me, right? They've been consistent and committed to their mission, which has been increasing financial inclusion, lowering costs, and creating a more competitive environment. And I kind of interpreted that as it's not political. They're not being influenced by political pressures and lobbying groups and banking groups. They're staying committed to this mission of financial inclusion and openness, and haven't compromised on that. I don't know if you guys agree, but that just impacted me from that conversation. And not to say that isn't the case in other markets, but that is a very nice best practice, right? In terms of staying committed to what you stand for and being consistent in that mission. I think the Brazilian example, the timing was extremely opportune with the pandemic, which has helped it really skyrocket. And other markets are starting. What we're seeing across the region is kind of three models emerge, right? There's the central bank, real-time payments being launched by the central bank. Something similar is occurring right now in Argentina with Transparencias 3.0. Another model is an actual banking association or a clearinghouse, kind of private companies coming together to create a consortium to enable real-time bank transfers going on in Colombia, in Peru, in Guatemala. And then the third model is an actual leading bank, a large issuer with big market share, launching their own platform and really taking off in terms of P2P transfers, and then that migrating to QR code and merchant payments. And that's taking place in Peru and Panama, most notably. So there's those three flavors that are all accelerating right now. And they all excel under different conditions.
No, that's a fantastic overview. And thank you very much for that. Are these systems that the governments are developing, do they talk to each other? Like, for instance, the cross-border payments, like what I hear from technology entrepreneurs in Europe, especially in the fintech space, is that one of the things that the EU has done well is because it's the EU, a lot of financial products can actually be passported from one country to the other. Payments across countries are actually really, really easy. Is that the same? Is that happening in Latin America, or is it quite fragmented?
I would say it's still quite fragmented. Latin America is there's very little cross-border trade. There are low levels of cross-border money movement, even though there are large immigrant populations all over the region and pockets of money being sent, but there is no good solution for that yet. I think it's a major pain point that a lot of fintechs are working on solving. Now, Pix has a cross-border functionality that they're starting to develop, and Banco Santander, I believe, actually already launched cross-border payments from Spain to Brazil. I believe Nubank, I'm sure you'll get into this a little bit, is getting involved in that space. So it's a big open space right now, solving for intra-regional cross-border transfers. Right now, it's really Western Union, traditional remitters, SWIFT, which is terrible for most people who need to send money across borders. So it's a big pain point.
Bruno, there's another question from the chat from Jose Frank. He says, how can fintechs support migrants, illegal migrants, vulnerable populations? There's a lot of displaced people across Latin America. There's a lot of Venezuelans all over South America. There's a lot of people from the Northern Triangle in Mexico and trying to go north to the United States. Is fintech something that can help solve their problems? You mentioned that one of the things that you guys did was people no longer have to carry cash with them. They carry their phones. I would imagine that if I'm a migrant walking from Guatemala to the Rio Grande, if I don't have cash with me, that probably makes me a smaller target. Is that something that you guys are seeing?
Look, that's a great question. I think that fintechs definitely can help immigrants with, to solve some of the challenges they have, of course, like, to make transactions, to move cash around. There is like an area of opportunity, I would say, for governments and fintechs to work together, which is how do you work with documentation? Especially if you're talking about illegal immigrants. They might not have the proper documentation, and there are several regulations that companies have to comply with in order to prevent money laundering, in order to prevent fraud, ID, and some other crimes that might also inadvertently impact immigrants' abilities to create their checking account. But I guess, as I said, I don't think that's that's an issue, an obstacle that we can't work around. I think like there are ways for us to fix that, but there's definitely an area of opportunity for fintechs to work together with government officials. And really, if you think about it, all the advances that fintechs have done in terms of how much time it takes for you to open an account. Many fintechs, for many fintechs, it takes you up to 5 minutes to open a new digital account. If you're talking about Brazil, Brazil has regulation that you can open an account to transact smaller amounts just by providing your name and your the CPF, your tax ID, your government issued tax ID. So basically, if you have just your name and your tax ID, and you can provide that to the fintech, you can open an account. It might allow you to have access to some of these services without having to to go through the hurdle of presenting additional documentation. So there are ways, I think, like using both existing regulations, but also thinking about like new regulations to address that issue for sure.
Sorry, I was muted. One of the questions that we were thinking about earlier is, do you guys see fintechs as competitors to the existing banking system? Or are the companies and individuals that you guys banking, are they people who have been traditionally excluded from kind of the brick and mortar banking business? Diego?
So this is one of the fun ones that we've been able to see firsthand. So I would say this has been like a major tectonic shift in the industry, especially for where we are, right? There used to be, and I would say when we were starting 4 or 5 years ago, we would go and sit down with the bank, and overall there was a sense of we are on opposite sides of the table. Like there's only a little bit of a pie in the middle, and we're gonna see who gets to eat, and if we can start nibbling at the pie on the table. And I would say that's the biggest shift that we've had over the last, I would say, 2.5 years in the industry as an overall. So right now, we understood that this is a new pie. Like we are creating an opportunity that beforehand it couldn't exist. It was not that banks didn't want to do this. So like this is one of those things that we've really, from a narrative point of view and understanding and sitting down with all major banks across the region and the world, it's banks want to participate in this market, but there's some structural things that are really hard from the technology side, operations, cost of doing business, that really when you're a digital enabler, and we really think ourselves as that, as an enabler for the market. So right now we have a dozen banks that sit behind us and participate with us and say, look, I really want to provide credit to this ecosystem that you're creating. How can we provide credit through you into these clients, because we do want to serve the SME. We do want to partner with you, and we're going to start to see an explosion of this in the region, because more and more banks are understanding that they have to really leverage the financial technology companies that are around to really be able to get the best of both worlds. We want access to low cost capital, the infrastructure, the bank accounts, the regulated part of this. We need to leverage that, but the banks need access to our advanced risk systems, onboarding, KYC. How do we go through and make sure that there's no money laundering going through this? All of these things have to be built, and leveraging the best of both worlds has been really astounding. I would say like the quality of the conversations we have today with banks are just fascinating, because it's, look, I really want to do this. Can I provide you this level of infrastructure? If you had this access to these things, what can you do better? And it's becoming an incredibly symbiotic relationship. And for us, it's been like world changing to be able to do what we do nowadays. We couldn't do if we didn't have our partners as formal traditional financial institutions behind us. And it's been a huge change in how the world sees us and how we see the world, to be honest.
Hey, Bruno, can you double click on that a little bit? Are your customers people who have been traditionally unbanked, or are these people that you guys are pulling customers away from the traditional banking system?
There's both things happening, Jonathan. And to go back to your original question, I do think there is room for both fintechs and banks to continue to operate moving forward. I think like if you think about the low income population, the ones that do not transact a lot, or they're gonna transact I don't know, like $50 per month. So the amount of money they're gonna generate to a bank is probably not gonna justify the marginal cost that the bank has. For fintechs, it makes a lot more sense to have that sort of population, because the cost of fintechs are much lower by having a completely digital infrastructure. Nubank has released some numbers recently in its latest earnings release, in which it shows how the cost to serve customers of Nubank is around 70 cents of a dollar, which is super low. It's one of the lowest in the industry. So if a customer costs you 70 cents on a dollar I can't recall if it's, I believe if it is per month, it makes sense for you to offer a product to a customer that is going to generate you what, $1, $2. So even if it's going to be a very low profit, it's still profitable. So it allows you to include those people and to invest in cross-sell in the future. So for that part of the population, I think it's going to be very hard for banks to offer financial products just because of their cost structure. But fintechs are definitely going to continue to operate, and that's why I believe fintechs have been so successful, including more people to the financial sector. Of course, like we know that for other segments, there's still gonna have room for banks, but we also like to believe that even for the other, let's say, more traditional customers or more traditional products, by having more competition of fintechs, this is actually helping improve the whole level of the financial services for everyone, really. So Nubank has been offering its products without charging any fees since the beginning of its operation. And ever since we did that, we saw a huge number of competitors also offering financial products that don't charge any fees. So I mean, competition doing what it's supposed to do, right? Driving costs down, like improving services. And not to mention, I mean, if you take a look at other metrics, such as how long it takes for you to open an account, how much, I mean, what is the amount of bureaucracy that you have to open an account or to get a credit card or to have access to credit. So we're seeing like improvements across the board in the industry, and that's one of the things that has been only possible by the competition that was brought by fintech.
Jonathan, if I can just jump in on that point, because just another element that I want to bring in is, when fintech started to ramp up, the speech was, oh, we're not competing with the banks, we're going after an untapped market, which has been 100% valid. But as change starts to be driven more so by generational change, that's going to be less true, because if I'm a teenager, or if I'm in my early 20s, I've lived in my mobile device almost my whole life. My first experience with financial services is almost guaranteed to be a neobank, fintech, digital experience. And maybe I come from an affluent family, I'm going to go to university, I'm going to work in the formal economy, I would be a traditional bank customer, 100%. But because my first experience was digital, I'm going to stay in that world. And so that's just a very interesting competitive element to keep in mind when we're thinking about the future. And another really interesting element, we've done survey work across the region. And when you talk to truly underbanked people who maybe don't have a smartphone, have never had a financial product, have always worked in cash, both SMEs and consumers, they're actually the most fearful of the fintechs, because the traditional banks are the ones they know and they've known their whole lives, and they're big, gigantic institutions, and they know that they're banks and they're secure and they're the big monsters in the market. And these fintechs are less known. They don't have as much reputational weight. Of course, that changes over time, but just a couple of interesting nuances to throw in there.
No, very good points, Lindsay. Another question from the chat that we actually have, and thank you, people, keep them coming. We have about 7 more minutes before we got to go. But cybersecurity, security in general is a big issue in Latino America. How important is cybersecurity to you guys? And along with what Lindsay said, trust in terms of the fintechs. Diego, Bruno, can you guys talk a little bit about, do you take cybersecurity seriously?
Oh my God, like this is one of those things. Like, to be honest, it's becoming a cornerstone of doing business. I think not just as a fintech, but in general, the relevance that this has. So think about where we sit in the current ecosystem, right? So we sit between banks and clients, and we actually have connectivity into both sides. And government systems and everything else. So it's everything from the data that we store, the amount of access that we have, and the inherent trust in what we do to be able to provide a bank access to a client where they have to trust. And this is the key part, like the trust part is essential to the system, because if the bank can't trust the data that's coming from the client, or can't trust me around how I manipulate the data, it all falls down. So this is one of those things that we have invested heavily. And there's a whole bunch of ways of looking at it, and we have a lot of conversations internally about how do we think about cybersecurity, like, because you usually think about cybersecurity as just the opportunity for ransomware or something around this sense, but cybersecurity has become so deep and entrenched into everything you do. So, like when we have a new bank partner come into our offices, they start to look at things as, do people leave their computers unlocked when they go to lunch? Like that level, like the conversations sometimes blow your mind. But this is one of those things that become the highest risk, because ultimately we're all building trust in the system. We're building a new system for this next generation. And we trust is the only thing, like, and verification of the trust has become, like, I would love the theory that banks could port their security audits from one bank to another or from one country to another. So like we answer probably 1,000 questions on cybersecurity every quarter for coming from our partners that want to do business with us, are doing business with us, and it's become something that is really has to be managed. And it's just something that you can't drop the ball on. It's got to be like a constant part of everything you do.
No,
Nico is
that's
absolutely right. And to complement to that, I think, Jonathan, there is a, I mean, I like to think that fintechs are much better positioned to deal with cyber threats than traditional banks. When you think about it, um, fintechs were born using digital technology. It's not an afterthought. It's not something that you had to come up with a strategy after building your systems in the physical world. You were built from scratch thinking about cybersecurity. It is such a fundamental issue for you to have in mind that you have to build all your systems having that foundation in mind. So when you do that, it allows you to be much better at your systems than having to plug a lot of legacy systems that were developed thinking to in a different world than thinking about something that was completely built on the cloud. So Nubank has been using the cloud since day one. It's not that we had to migrate things to the cloud. I mean, as I said, so from really, I mean, everything that we built was done thinking about cybersecurity from scratch. We invest heavily on it. We also have been doing work to try to really push the whole financial system to be better at preventing cyber threats. We do understand that there is not an issue of one single entity, it's not an issue of fintechs, not an issue of one bank. People like to think that, oh, if I continue to do business with my traditional bank, I won't have to worry about cybersecurity. That's not true, because like all the financial system is plugged into the network. Everything is interconnected. Even traditional banks, they're offering their products through the phone, through the internet. So everyone is having to deal with that. So not only I think that fintechs are much better positioned to deal with cyber threats, but I also think that they can and will have an important role to continue to push the industry forward, because we know that the reputation of the industry is super important for everyone, and that is one of the risks, of course, that regulators are continuously looking at.
it seems like you can't talk about financial technology. You know, I open up Bloomberg.com and there's a big section on crypto. You read the Financial Times, there's inevitably an article about crypto. El Salvador has made some news recently talking about crypto. I talked to friends in Venezuela, and it sounds like about half of the economy runs on crypto. The other half runs on Zelle, which is a US fintech system. Does blockchain, how are you guys seeing the use of blockchain in the region? And I know that cryptocurrencies are different than blockchain, but is there a future? What do you think is the future of blockchain and crypto in the region? Lindsay, I think you guys actually recently did a study on that, did you?
Yes, I can jump in. So, we did a study on this recently, and we found that over 30% of the survey sample is smartphone holders. So you're some participant of the digital economy. Over 30% of respondents claim to have purchased cryptocurrency. And about a third of those classified themselves as heavy users, and the rest casual to I just did it one time. And another 30% are interested and want to, they just haven't pulled the trigger yet, mostly just waiting to learn more. So that's 60% of the entire, digitized population is active or will become active in crypto. And so the question isn't of when will this have an impact or if it will, but how much of an impact will it have? Because right now, the main use case is still speculative investment, especially with now, things have crashed, but a year ago things were soaring, and there's a lot of get quick rich mentality, get rich quick mentality, and I want a piece of this pie. And as that develops and as the ecosystem becomes more regulators, fintechs, wallets, and banks become more comfortable developing actually useful use cases and applications of crypto for stable savings, for remittances, for cross-border money movement, will definitely be a compelling value proposition. It's still early to see how those things are going to really make us a sustainable impact. But we say that at this point, everyone has to have a crypto strategy. It requires a total knowledge transfer and like learning a new language. And for banks, it's like, oh my gosh, I had to learn digital. Now I have to learn this. It's happening. It's coming.
And my last question, I just kind of want to wrap it up. 30 seconds, Diego, Bruno, Lindsay, what's helpful to you as a business? If people wanted to help out, what's helpful to you guys?
So I think this space is part of that, Jonathan. I think this is exactly what the region needs, is more visibility. Like, I think as we go into the different part of the cycle, like understanding that the region is building some real infrastructure, some real things that are going to be around and can weather storms. I think this is super key, and I think it's just part of the cycle of how to continue to expand and understand that Latin America is a huge opportunity for everybody. Like, it's still in the nascent years, and we still have so much to build in the region.
Excellent, Bruno. What's helpful to you? What's helpful to you guys at Nubank?
I think, Jonathan, there's so much opportunity for the private sector to partner with governments to really push forward, financial innovation and to push forward financial inclusion. I think some of what we've been seeing in Latin America can be sped up. Actually, there's room for us to continue to improve the system in many countries. So from stuff that deals with what's the sort of KYC process that you have to onboard new customers, digital customers. What are the rules regarding portability? Is there a real-time payment system infrastructure available in the country or not? What are the potentials for that? So there's so many opportunities, I believe, for us. But many of those things, I don't think the private sector will be able to do it by themselves. They're already doing a bunch of interesting things like developing technology and driving innovation. But I think there is a huge potential for the private sector to partner with governments. We actually, just to wrap up, we were involved in an initiative, very interesting initiative, together with the World Economic Forum, the Inter-America Development Bank, and some other players to try to come up with some recommendations of what countries could be thinking about if they really want to invest in fintechs and they really want to think, actually act to see more of the fintech activity in their countries. There is a report that was recently released. There's a bunch of reports, very interesting reports by the BIS. There are a bunch of ideas being generated, but I think there is what is missing is really to sit together, partner, and really put these ideas to work.
Fantastic. Lindsay, what's helpful to you guys at AMI?
What's helpful to us at AMI is sharing information, being open, sharing expertise, sharing what each individual has their own perspective and they see things that nobody else sees. So sharing that with us, with others, contributes to this collective body of knowledge and information, which, you know, when I get information, I give it back. And so we're a receptacle for this analysis, and that everyone needs to grow and grow in line with trends. And so openness and data sharing, and being honest with ourselves about what's happening to my business, looking at it, being direct and being objective, I think is important for anyone in the industry to see what's happening and be able to move accordingly.
Excellent. Diego, Bruno, Lindsay, thank you guys very, very much for participating. I've learned a ton, and I'm kind of neck deep in this stuff all the time. So thank you guys very, very much. Thank you to the Clayton Foundation for sponsoring this and making this possible. And thank you, Wilson Center, for all that you guys do in the region, and for actually bringing topics like this to the surface. So thank you guys very, very much. Have a fantastic day, and we should be having another one of these Going Digital series, hopefully in the next month or two, so stay tuned. Thank you guys very much. Cheers.
Thank you.
Thank you, everybody.